Hello, my friends. It's Tuesday, May 31st, last day of May. I hope everyone had a wonderful Memorial Day weekend. Starting out the week, we're looking at the economic calendar. There are no announcements that are going to be market moving, so let's move right on to the morning news. Now, morning news, the flags are in the red. Dow, S&P, and NASDAQ. Two flags are in the green, which we would rather not see in the green, and that is oil and interest rates. Oil is up to $119 a barrel. 10-year Treasury is 2.85. That's ticked up. And today, the president is meeting with Fed Chairman Jerome Powell, and there is going to be talk of further rate increases. And looking down at the morning news, this headline hit me, or caught my eye. Fed Governor Chris Waller says he's prepared to take interest rates past neutral to fight inflation. Now, what does that mean to you? Higher rates, right? Higher rates, lower equities. Okay. So, the market going back to the flags. Dow is down 200, S&P down almost 30, and NASDAQ down almost 60, but that's not surprising following the strong performance the market put in last week. So what changed last week that caused this? Now, this is the one-day S&P chart, and I want to call your attention to the last several days. Market shot up spectacularly, the strongest couple of days we've had in a while for the S&P. And why is that? Certainly it wasn't because of interest rates coming down. Certainly it wasn't because of oil prices coming down. What was causing the market euphoria? Absolutely nothing except one thing. And that one thing was the Memorial Day holiday. And on the Memorial Day holiday, there are fewer traders in the market. And the bears have had their way with the bulls over the past several months. So being a thinner market on Friday, the bulls stepped in and boom, there was less selling pressure, fewer traders looking to short the market. And the bulls stepped in and brought prices up. Today, and I sent this around in my newsletter over the weekend, I don't expect this to hold. It just didn't even make sense other than the market euphoria caused by the Memorial Day holiday, plus the less selling pressure because fewer traders being in the market to sell. Anyway, let's go over to the emini. Now, the emini, it's just before the market opened. Prices are trading at 41.28, and here is my calculated trading zone for the day. I'm going to show this to you guys. Every day I use Taylor's book method, Taylor's trading technique, to calculate the area where the market is likely to trade for that particular day. And I always put this on my chart as a guide. It's a tool. Just like the previous market close, which is here at 41.56, where the market closed on Friday. That's where the E-minis closed on Friday, okay? And Friday was a spectacularly happy day. And the market is going to give some of that back today. And I want to show you the big picture. Let me go to a 15-minute chart here. Here's the big picture. Here was Friday. Here was my trading zone on Friday. My trading zone predicted the market should trade down here. And instead, boom, it went all the way up here. It's going to give back that today, maybe that and then some. We don't know. Then again, the market does generally, let me go back to my 3-minute chart, okay? The market generally does trade within the range. Let's see, there's a range here. There's a range here from 41.20 to 41.97. So there's a 77-point range that my calculations are saying the market will trade in. And that is from the low to the high of the day. We don't know where the low is. We don't know where the high is. But I move my trading zone based on the intraday high or low. And people who subscribe to my trading zone report know how to do this. At any rate, where will the market go today? Well, the market is already down significantly. And so we will see what happens. But remember that in trading, we have to be able to look for the price setups. And there are only 6 price setups that I teach in my course. Remember, GST, TMC, gap, support and resistance, time and price, trend, momentum, and candlesticks. Those are the 6 price setups that lead to decisions on whether to trade that I teach in my course. And if you don't know how to assess the market or how to read the market and look for these setups, then maybe you ought to take my course. Certainly take my free course that will make you aware of the pitfalls that the market sets for newbie traders in order to get you to make, or get newbies rather, to make trades that are against their better economic interests. At any rate, you have a great day. It's just before the market open. I'm going to get this up on YouTube. This is Marv Eisen for Timeless Dollar, May 31st. Thanks for watching, and I'll see you in my next video.